Hey fam, it's your girl here, the mortgage sidekick, giving you some information brought to you by Kabaka Financial Group. I'm the best broker in the world. Anyway, sorry, I just wanted to give you some information, FYI, about the interest rate. So as you know, the Feds promised, well, they didn't promise, but they stated that they was going to cut the rates at least 3 times this year, and it hasn't happened. And so now the report came out for June within their meeting is that they are really looking and moving closer to cutting the rates at least one time before the year is over with. And just let me give you the bottom line of what Powell said. June's inflation data gives the Fed further confidence that the direction of the inflation and more broadly, the more balanced for labor market are heading in the right direction. We still expect the Feds to begin cutting interest rate at some point later in the year, as Powell expressed at the Federal Market Committee meeting in June. So, CPI means consumer price index. And like some of these things, like we should be watching and paying attention to, but we truly don't understand, especially being in the mortgage industry and things like that. However, I want to tell you this. A lot of people are saying like, yes, I knew rates was going to go down. So I'm going to buy a home. And some of you have been preparing to buy that home and waiting for interest rates to go down. Where here's the good news and the bad news. For those that are waiting for the interest rates to go down, I pray that you prepare to pay a higher cost for the house, because this is how it goes. When the interest rates are low, sellers know that they have the advantage to charge a higher price for the home. It does have to meet the market value for that area. However, sometimes a certain property can be sold and it takes the precedence that makes all other property in the area can be sold at a higher price as well. So example, if a house is being sold in an area for $250,000 and a seller says, well, I'm going to increase my house sale because the interest rates are low and they know that people want to buy because of the interest rates being lower, they then increase the price. And they could do that. Except a lot of times the market value, like the property value for the houses in a certain in a certain region, a certain demographic area does not add up. However, if they could get it through and get the loan closed, and they say, for instance, they sell it from 250,000 to 400,000. If they could set a precedence, then that area, that geographic area, now becomes a higher market area. Even though it wasn't zoned for being a higher market area, it can become one and become zoned and deem that area to have a higher market value. And so another thing is this, with interest rates now being at 6%, that's still, from me being in the industry for so long, that's still pretty low. You can buy a house now, say for instance, at $380,000, right? At 6%. The house is going to be cheaper. But once the interest rates are cut, that house that's 380 is going to go up because they now know that they can rise. And I know a lot of people say that, like, we can't afford to buy a house, we can't afford to pay rent, we can't afford to do this, but technically you can, because there are a lot of programs that is out here now for people that want to take advantage of these resources to get a home. Like I did a video on NACA. NACA helps you. NACA interest rates is at 5 point something. You don't have to have no closing costs, no down payment. Anything like that. You just got to qualify for the steps that you have to go through. And a lot of times people don't want to put in the work. People don't want to do nothing but complain. People don't want to do nothing but come in the comments and, oh, this ain't true or that ain't true, and never bought a house a day in their life, never worked in the mortgage industry a day in their life, do not know anything but what a cousin or a video or something has told them. And that foolishness needs to stop, because here's the thing: when you listen to the wrong person, you are then taking in information that is helping you to decide on a negative. Here's my thing. A lot of times when people say that the housing is too high for people to buy a home, is looking in areas of their dream home, is looking in areas that they can't afford from day one. So stop looking in the areas in which you cannot afford. Humble yourself and go and say, I have to have a starter home. I have to get a starter home that I have to pour some love into. It may be a little ugly at first, but then I'm a beautified up. And then after putting in the sweat equity, you put in some more equity, and now you are able to take that equity out of your property and go and purchase you maybe your dream home or a second property to make money. And so you could take that first starter home that you made beautiful and rent it out or flip it. Then you move to your second property. But me, myself, I love multi units. I believe that the best thing to buy, to purchase, is a multi unit, whether if you starting at 2 units, 4 units, or a storefront. Anything where you can live in one of the units for free and rent out the other units to tenants. And I know a lot of people say, oh, it's bad tenants and they don't pay the rent and this and this and this and that. Listen, there are some good people out there too. It's not all bad, because if that takes the case, all of these complex, all of these buildings and builders would not be continuing to build. I mean, look around you, drive around and see buildings are steady being built. Complexes are steady going up. So somebody must be paying their rent for these builders to continue. And I know you have to start somewhere. So start with a 2 unit, start with a storefront, start with a 4 unit where you live in one, and then as your primary residence, and allow the tenants to pay you rent for the market value of that area, which will allow you to pay your mortgage, your property taxes, and your homeowner's insurance. And then, therefore, your other unit, so say if you get a 4 unit, that's 1 unit that could pay those bills. Then your second unit could pay like the water and the maintenance of the building. Say like you gotta have your grass mowed, and if you can, hire a family member, hire a teenager within your family that you know is a hard worker. Hire them and let them keep the hallways and things like that clean. Like, and mow the lawn and stuff like that. Then you have a 3rd unit where you take that money for the 3rd unit and you save that, and you put that in a savings that's going to yield you some type of interest. So just in case something happened, a a pipe burst, or a tenant don't pay their rents, anything, something happened, you have the money saved to handle that problem while you still are living rent free and you still are doing your business or whatever, making money. So I hope this helped, but prepare for the interest rates to be cut. And if you do want to buy a home, as I stated before, please consider a starter home instead of the dream home. I love you.